So, Michael Saylor, probably Bitcoin's biggest cheerleader, has this massive prediction for where its price is headed. And you know what? His reasoning isn't some crazy complex chart pattern or market hype. It's actually based on one surprisingly simple economic idea.
So you gotta ask, right? What's really driving his argument? Let's get into the core logic that has him so darned confident about where Bitcoin is going.
Okay, here it is. The whole thing boils down to a classic economic principle you probably learned in high school. Demand is just completely blowing past supply. I mean, it's not even close.
All right, let's jump into the first section here. We're gonna look at the simple math, and trust me, the numbers here paint a really, really clear picture. Okay, so first, let's talk supply. Every single day, like clockwork, miners create about 900 new Bitcoin. That's it. That's the new supply hitting the market. It's totally predictable, super steady. So, that's the supply side of the coin, right? Pretty straightforward. But what about the demand side? Just how many of those 900 coins are getting bought up every day? Well, hang on to your hats for this one. Recent analysis shows that just from corporations and the new Bitcoin ETFs, the demand is for around, wait for it, 3,200 Bitcoin every single day. No, that's not a typo. The demand from just these big players is more than 3 times the new supply being created. And when you put those two numbers side by side, wow, you can see the imbalance right there. You've got 900 new coins coming in, but a demand for roughly 3,200. This is what economists get excited about and call a demand shock. And when you have that much more buying pressure than available new supply, well, Econ 101 tells you that's going to put some serious upward pressure on the price. Okay, so who are these big buyers? Who's behind this massive demand? Well, according to Saylor, it's not just one type of company. He actually splits them into two very different groups. Yeah, he calls them operational companies and real treasury companies, and they each have a totally different game plan for how they're using Bitcoin. So Group 1 is what he calls operational companies. Think of these as businesses that are basically deciding to hold Bitcoin on their balance sheets. So instead of, paying out dividends or buying back their own stock, they're taking their cash reserves and converting them into Bitcoin. They see it as a way to strengthen their whole capital structure with a digital asset. Then you have Group 2, which he calls real treasury companies. Now, these guys are a bit more next level. They're not just parking cash in Bitcoin. Nope. They're actively using it as collateral to create brand new credit instruments. It's kind of wild. They're basically treating it like digital gold, using it as this foundational asset to build new financial products on top of. And it's really that second group that opens the door to Saylor's much, much bigger vision. We're talking about a 300-year plan here. This isn't just about a price prediction anymore. It's about a fundamental shift in how finance works. I mean, listen to this quote. He's not talking about the next 300 days. He's talking about the next 300 times years. He genuinely believes Bitcoin is going to be the foundational infrastructure, the bedrock for the entire credit-based economy for centuries to come. That's a huge statement. And this all feeds into his big idea of digital capital. The concept is pretty simple when you think about it. As our world becomes more and more digital, we're going to need a purely digital native asset to be that ultimate foundation for everything. And for Saylor, Bitcoin is the obvious, perfect answer to back the next wave of financial tools. All right, so we've looked at the hard numbers, we've touched on the super long-term vision. Let's bring it all together. What's the main takeaway from all this? Okay, so let's recap why this all matters. First, you've got this undeniable supply and demand imbalance. It's just simple math. Second, the main drivers here are big-time players, corporations and ETFs. This isn't just retail hype. Third, and this is key, Saylor's argument isn't about short-term trading. It's about a massive long-term economic shift. And finally, this isn't just theory. It's already happening. We've already got at least 145 public companies that have put Bitcoin on their balance sheets. So that leaves us with one heck of a question, doesn't it? We're watching this massive demand shock play out in real time. Is this just a flash in the pan, or are we witnessing the very beginning of a permanent change to the future of finance as we know it?